Thanks, Ben. Thanks, Robert. All right. I want to say if you're here, Rick, welcome back. Yeehaw. All right. I thought this was a little apropos here. We're a little funny that we kind of poked our head up on Friday really high, and the Bulls are saying this is where I usually start screaming. We don't know whether this is the top of the roller coaster or not. We'll see. A little disclaimer: trading involves the loss of risk of capital, the risk of loss of capital, that is, and examples are provided for educational purposes and not to be construed as trade recommendations. They are trade ideas. They're what I would be looking at. They're not necessarily this would fit your risk profile. So, aloha, Malcolm. For anybody who's new, I'm an ex-U.S. Air Force fighter pilot with master's degrees in both computers and business. I've been an active trader since 1998, full-time trader since 2009, and I'm a technical trader who uses limited fundamentals as well as the technicals. So I moderate for H&R Candlesticks from time to time, and I do provide one-on-one mentoring. If you go to the website, you can find out more on how to contact me, and we can have a short chat. Stick around to the end of the presentation. We've got a little bit about the Hit and Run Candlesticks blog, the live trade alerts scanner, and right way options. The agenda, we're going to go over the economic and earnings calendars, a little bit of a market overview. I have a fair number of trade ideas, mostly to the long side. Q&A, not specific. And then, time permitting, we're going to have a look at your stocks. Only one per person, please, so we can get out of here this evening. Here's the economic reports. We do have lots of earnings out there this week, but we still have a fair amount of economic reports, although not as much as last week. Factory orders at 10 on Monday. International trade and international trade at 8:30 on Tuesday. ISM non-manufacturing and JOLTS at 10 on Tuesday. Productivity and costs at 8:30 and petroleum report at 10:30 on Wednesday. Jobless claims comes out every Thursday. Thursday will be no different here. And consumer sentiment at 10 on a Friday. I apologize about the small size here. Hey, Rickster. Notable earnings are listed with the blue highlights ones. Those are the ones that have approximately 10% or greater short interest in the float. And if they get any kind of surprise to the upside, watch for a short covering rally. That's what I try to use. I did put out the list earlier of the earnings. Let's go get that one more time. And we also have tonight's look at the week ahead. There's tonight. All right. Let's go look at the market overview. I like to start off with oil. Don't ask me why, but it normally happens. 5660 area has been the area of the bugaboo here that we could not get back over about, a week and a half ago. Glad to hear that, Rick. Let's see if we can get over. My stochastics RSI says we're going to have a pretty good run at this. We do have the 200 period moving average there at 57 and change. I don't see that as a big deal, but 56 60 is a price level. We get over that, we'll probably head up to 58 plus, and then 60 is from a little bit further back. If we fail, we'll probably drop initially down to 54, maybe 53. Let's look at gold. Gold has been in this down channel. Let me go out to a 6-month chart. Actually, I don't need that. All I need to do is get the 3-month chart. We are trying to break out of that channel here up to the upside. We probably have to get over 1520 to 1525 before I'm a believer here. And no, the monkeys aren't my favorite, necessarily favorite with I'm a believer, but hey, if we get up here, we're probably going to need to hit 1520 to 25, then pull back a little bit and have another go at it. At least that's what I'm seeing from the momentum. If we get up there, 1540 is possible. That might bode well for GDX or GDXJ or JNUG or Nugget. Now let's look at the equity markets. Friday and then tonight. Friday was a really, really strong day. We basically had bullish engulf after a kind of a warning shot across the bow on Thursday. And I guess they shrugged off part of the manufacturing numbers, which were not very strong. They put more credence in the employment numbers. Maybe they just took an opportunity to run the shorts out to town, because we can see from, let's see, look at the week ahead, go back up here. See all these yellows? High short interest or relatively high short interest. There's a lot of short interest out there in the market. Lots of it. Some of them over 50%. That is probably a little on the extreme side, to be honest with you. And it's probably why the contribution to the rally on Friday. Let's see if we can get follow through. The stochastics RSI, not saying we're anywhere near a top or anything. I'll get to the T2122 here. Hold on a second. Pop this puppy up. T2122 is a 4-week new high, new low ratio. Let me go to lines. Here we go. And you can see we're up in the 85% area of the, we've got probably 85 new monthly highs for every 15 new monthly lows. So it's a lot. Normally we get a pullback when we get up into that area. And anywhere in this area I could see us pulling back. The last time we got up in here, we pulled back a little bit in the markets, but the percentages went down to as low as 60%. So we were riding the markets up on fewer and fewer stocks making monthly highs. That divergence of markets going down, the T2122 index going down, while at the same time the markets were going higher, gave me a little bit of pause because of the divergence there. We broke out of it fairly smartly on Friday, and assuming that we get follow through or whatever, I think we're due for a pullback, maybe up after another day or so. So we'll look and see. All right, let's get that out of the way. All right, we're trading up a little bit in the overnight session so far. Dow basically followed the S&P 500. Same with the stochastics. It all looks like pretty much a mirror image right now. NASDAQ. Actually, NASDAQ was a little bit stronger than the rest, and Thursday was a little bit of a dark cloud cover, but Friday was a very, very strong day. Russell was lagging quite a bit. We have not got to all-time highs in the Russell. Let's see, did we get that in the? We still have not got to all-time highs in the Dow. We did it in the S&P, and most definitely the last couple of days there in the Nasdaq. But the Russell still hasn't gotten there. It's been lagging quite a bit. The VIX down around 12.3. No fear in the markets. All right, so let's go back over to the presentation. All right, we've got some trade ideas. I posted those out a little bit earlier. And let's go look at them in TC2000. And let's go look at personal longs. And go to daily. Aflac's pushing this 53.75 again. Assuming we get over that, or maybe as high as 53.90. Why don't we just call it 54? 54 might be a little on the high side, but let's see. Not exactly. 54. First sell point will be about 55. It's a buck, and then anywhere from 56 to 57. So $1 at a time. Stochastics RSI is not telling me it's ready yet, but it could do that fairly easily. And the balance of power is not overly strong. AMAT curling back up. It reported in the breakout. Pulled back. Where did it pull back to? Pulled back almost to the penny to the breakout level. We did a kicker in the opposite direction on Friday. If we get any follow through on Monday, I think we retest this $57 level. Berry, B-E-R-Y. Why do I have only 10 here? Hold on one second. Personal, filtered, flag. All right. Let's see. Copy, flagged to longs. And I don't think all of them are longs. But let's see. Made a little boo-boo there because I knew darn well there was more than 10. BLDR did a breakout. The breakout level is right here around 23.5. Let's see if we get follow through. Believe we're at all-time highs. Above this $23 level. And let's see if we get the follow through. One other way, if you don't try to play a 30 to 45 degree runner, wait for the pullback. Wait for this puppy to march up, pull back, establish a low, and start to curl back up. Go long on a bullish signal, buy signal on this with a stop just below the curl up. And if it's high enough, that swing level could be your target number one. That'll almost lock you in a guaranteed winner. CB, this is going to be short. Yep. CME also is short. Let's copy that over there. I do apologize for the mix-up there. FFIB. Looking for a retest of at least this 150 level and possibly 153 plus. I would have gone long on FFIB on Friday, but I don't normally initiate new positions on the Friday. I only just take profits. Never know what's going to happen over the weekend. HAL pushed this area right here in the green level around 2050. Pulled all the way back down to about 19 and a quarter, kind of this congestion area, and then I'm looking for a breakout here over 2050 to go probably as high as 2250 or so. This high volume spike day at 2245 to 2250 is untested. I'm looking for a run there. It is an RBB, around the bottom breakout, and the ultimate target would be around the declining 200, which is going to be, well, why don't I just go ahead and mark it here. It's going to be probably in this $24 level. See how the $200 period moving average is coming down. It'll probably come down to around that area, and it's an area anyway. Another long is JB Hunt. We had a consolidation pop out of the box, pulled right back in it as the markets got weak, but looks like it also wants to continue to break out here. And area chart, not all-time highs, but 123 to 130 is possible. I've noticed a lot more of the shipping stocks, ports, things like that are showing up on my scans. So transportation is pretty strong right now. JP Morgan, nice J-hook, follow through breakout. See if we can get any follow through to the upside and a continuation of this move higher. Let's look at the area chart. All-time highs for JP Morgan. LABD is going to be down. Let's copy to shorts, remove that. LHX is also. McDonald's is also. Mohawk. Mohawk had a nice run on earnings here, has 7.3% of the float is short. Basically did a flagging pattern right here. Very tight one. I'm ignoring this Friday excursion here because it was it was an anomaly basically. Probably did stop runs, and I see this anything above, say this area right in there. It's probably an opportunity for a long. And a 45-degree runner. Let's look at the area chart. I'm looking for my first resistance around 153. And the target's right here, 156. Probably a good option trade if you could get a good spread there. NVIDIA just seems to be kind of grinding higher. Do a surge up, pull back, surge up, pull back. It's possible with the follow through here we go back up towards this $212 area. And we also look at the area chart. We were as high around 280 at one point in its heyday. So could it go back up there? Yeah, I think they're starting to fight back with the AMD folks as far as the graphics cards. Ollie, and they also had a fundamental issue where they got caught with their pants down having too many graphics cards with the Bitcoin bubble burst. Ollie, another round about a breakout in kind of the gap here. Earnings 12.3. Still have enough time for it to kind of float higher into this gap area. Wouldn't take very much for us to make a bit of money here on an option split trade here. Philip Morris, probably, I'm thinking 85. The 89's a bit optimistic. Won't be in a straight line. Doesn't report again until February. So a zigzag higher is not an unreasonable expectation. Phillips Van Heusen PVH has kind of been in this trend here. I'm looking for a possibility of it breaking out of that level here around 93 and going higher. One other possibility is that you could go long, assuming it either pulls back to the 89 or 50 level or whatever, or pulls up higher. Looking for a retest of at least the 93 and maybe use that as your first target. Take some off the plate, see how it goes. Short crude oil is also a short of a short, which is really a long. Skyworks, semiconductors, and SMH. Let's look at that real quick. Pretty strong, not all of them. But AMAT was on the list, really gapped out, 95 to 98. Look at our area chart, and this is not at all-time highs, but just pushing 100 again. This is probably a little bit far for me. What I'd want to do is watch maybe an hourly chart, see if it comes back to this 96.75 to $96 level, and if it does that, then I could expect it to curl back up. I am not going to chase it in any way, shape, or form from here, but I'm keep an eye on it. Thor Industries, THO, nice strong move up, pull back. If I look at the Fibonacci's here, I'm going to use the quadrant lines from right here. It basically went to about a 0.382 retracement, about 33%. I just eyeballed that. There's the 50%, there's 25%, and it's a little closer to 25 than it is to 50. What will it probably do here? I think it goes back up and retests the $69 to $70 level, and then possibly higher from that. And is it bottoming? Bottoming is a process. We have had on the weeklies, we've had a change in the balance of power and money stream both. So you see that happened right back here in first part of October, end of September. Okay. Tiffany gapped up, pulled back, curling back up. I expect a retest of 130. Trying to remember what the news was on it, but I guess it doesn't really matter. I'm watching the charts. Now, I'm going to fill in the blank here. Let me change the color here to green. Let me show you what this candle was really. That was the candle on Friday. Oh, sorry, a week ago Friday. There's Friday, Thursday, Tuesday, Monday, last Friday. Yeah, they want to buy them, right? Okay, I thought it was a buyout. I didn't want to open my mouth and sound like a fool, but it's kind of hard to chase these. But are we going to get a gradual increase here to the high side? Obviously, somebody thinks that they're going to try to ask for more. They may get it. You know, the movement here, about 25 to 30% is a little bit stiff. May want to drill on down to an hourly chart. See if you get a breakout here or move back up towards that area, or go to a 2-hour chart or 4-hour chart. You'd have to be willing to give a stop down to about 121, looking for a retest of around 130 and maybe even higher. They had buyers up here, lots and lots of buyers up here. Let's go look at one thing. Let me pull this over here. I'm going to go out to shortsqueeze.com and I'm going to type in TIFF, and we'll find a lot of that buying. It's probably people that were running for the hills. 1327 percent of the float short. That's quite a bit. I use anywhere between 8 and 10% as my high short interest number, so it's quite a bit higher than that. That's probably why we're going to get back up here to this 130 or higher. Betsy, you think that Louis Vuitton is offering 136 to 140? Is that what it is? So why wouldn't it go up to there? Some people think maybe it won't get that. They won't accept it, huh? Okay, let's go back. Whoops, I was there. Now, so there, I bring up a lot of them that are not V-stop. Yeah, let me go ahead and do that now. The V-stop settings here on TC2000, the range is 10. The multiplier is 1.5. Oh, they're actually have a bidding war. That's even better. Um, I'm not the purveyor of this number. Doug Campbell spent a couple of years refining this number, and it seems to work fairly well. Notice how it worked there on the 4-hour chart. And it's a starting point. What I normally do is I look and see where that is and see if there's some sort of technically supportable price level at or near that level. Now, obviously in Tiffany there won't be, but others there might. Okay. All right. Skyworks, semiconductor, boom. Let's see. Sorry, we're going to go here to Texas Roadhouse. Texas Roadhouse moved up sharply. I think that was on earnings, pulled back. Let me look at Texas Roadhouse, the shortness again. 7.62. It's fair. It's mid to high. I think probably a retest of 60 is in order. And then possibly higher. Our restaurant's going to turn around a little bit here. If consumers have money in their pocket, unfortunately, they're probably going to spend it. They're not going to save it, although we're saving more. Our debt levels have actually gone down, which is actually a good thing. All right, I've got one on the list that reports tomorrow morning before the open. The reason I've got it up on this list is we could gap anywhere around 24, 24 and a half, and maybe even make a run up to the high 20s. Let's see how it reacts, Bob. To be honest with you, all of the news will be reflected in the price. So heads up. Yep, I mean it's good to be aware of those, but with UA and UAA, they have almost 21% of their float is short. And one of the things that they want to do, if they have good earnings, maybe people may or may not discount the accounting fraud accusations. Are they cooking their books? I don't know. The market's going to tell us what they believe. All right. We'll see. Our dear departed friend, Goofy Golfer, was fond of saying, it's not about the numbers, it's not about the report, it's about the reaction to the numbers. Let's just see what happens. And we'll know pretty soon. And notice I didn't say you should go long, but it could be on your watch list and see. Because it has high short interest, it has the possibility of doing a pop. Now, how do we avoid a pop and drop? Let me explain how that would happen. Let's say that we get a gap in the morning, and these are 5-minute candles, although this is daily chart. I use a 5-minute opening range. If it doesn't make a higher high, yeah, the shorts are going to start covering if we get above this $21.75 to $22. They're going to start running for cover. Now, they could just get a fake out and then a pop and drop, or gap and crap, whatever you want to call it. But usually the 5-minute opening range, the first 1 to 3 minutes, is the amateur that are being primed by their broker to buy this thing on a recommendation. and they overpay. They usually put in a market order, and it goes up, goes up, goes up, and then will start to peter out. Then the pros take over in that 3 to 5 minute range, and if in the 6 to 8 minute range they take it to new highs, they're serious. The pros have taken over by that time, by and large. Again, I have a presentation on how I trade gaps on my YouTube channel. I'll point out the YouTube channel in a bit. And Bob, you're more than entitled to do that. I'm going to let the chart tell me whether I should be interested or not. I've got it up at a resistance level. I'm just going to watch it, and it'll tell me whether I should be in or not. Union Pacific, another one of our transportations over 172.80. I think she goes up to close to 180. Stochastics, RSI, and balance of power are pretty decent here, and it doesn't report until January. Urban Outfitter, I have noticed a lot of apparel stores are showing up on my lists. Maybe they were depressed for so long, but this one I think also has short interest. Yep, 24%. Where could it be going? Any of these levels up here to the high side. Let me delete that. So this 30-30 area that we're at, or were at before we pulled back, was one. A retest of that area is probably likely. We could potentially go up here to 33 and change. I will point out one problem, one negative, and that is it reports on the 19th. Okay. Let's look at URI. Nice breakout. See if it continues to go at 142. I'm going to suspect that we start to run into a few sellers here. If it goes sideways or does a little pullback, could be another opportunity. And this 142 level is a significant level before 170. URI, let's go to a weekly chart. Okay, let me slide this back. You like this chart from 2016 to 2017 for about a year and a half to 2 years? Move up, pull back, move up, and then we got the pullback. But United Rentals, while we were building stuff out, was one of those stocks that just could not miss. Could we be going back to that area again? Hold on a second. Oh, wet my whistle. Thank you. I don't know. The chart's going to tell me. But this is a key level right up here around 141, 141 and a half. Let's look at Valero, VLO. Really steep here. This is one, I've got it on the long list, but I wanted to actually show you what not to do. I don't know that I'd be chasing this one up here. It got a long ways away from the 17 and the 50. The slope of this run up was pretty high. But I also want to say this is not a short. I don't care what happens. When we saw these two candles here, there were people asking in the room, should we be shorting this? Okay. Let me tell you my philosophy. There are bullish signals that are just bullish signals that tell you if you were short, it's time to cover. There are bullish signals that are telling you it's time to go long. Those are two different setups, and both of them depend upon the context of which you get that little small candlestick, quote, buy signal, unquote. Now, up here, there was a sell signal. This is a sell signal in Valero for those who are long. This is not a sell signal to go short. because it's still in an uptrend. At any time in here, we could get buyers coming right back in like that and could rip our lips off. So for me, the trend is your friend. I'm going to trade in the direction of the trend, and as long as that I've got this kind of shape between the 8 and the 17 moving averages, if it's pointing that way upwards, the only trade I'm going to take is a long trade. So I'm looking for a pullback opportunity. Conversely, if we have the 8 and the 17 pointing down, I don't care what happens with a bullish buy signal. I'm looking for something to the downside. I'm looking for a bounce, reversion to the mean, to go short. And we'll talk about that in a few minutes when we get over to the shorts. So I want to make sure that, I put this on the long list because it's a great example for us to go over. Winnebago. Winnebago has 13% of the float short. It hit and broke through that 47.45 area. This 57 is in play, but not necessarily. Let's go to a weekly. It's probably not a straight line. Yeah, there are some good chart setups. Some of them we've missed. And that's because we are not going to play, we're not going to roll the dice on earnings. Because if you miss, you're going to get absolutely slimed, just smacked to the ground. So we can just bide our time, be patient. But Winnebago with that float short, I see it grinding higher. Let's go back to a daily. And we just have to find our way on board. Well, in this case, it came back to that 47.50 area, which was that swing level there. Maybe if it gets over this $50 level, it might be an opportunity to go long. XL Energy. It's a futility. That is on the short list, if anything. Copy to shorts. I don't think I like it as a short, though. Last one here on the longs at around the bottom breakout Zillow Group. Zillow has been out of favor for a couple of months. There are times, like back over here, let me show this. This is a good one where people were saying, oh, it's bottomed, let's buy it right in here. No. All this is probably doing is a reversion to the mean. Bounce. What this is doing is a bounce up to anywhere around the 8 to the 17 or price level, and then it's going to roll back over. And sure enough, it did. In fact, it wasn't even strong enough to get up to the 8 period exponential moving average. When I see this in a downtrend, let's get our downtrend going here. We were in a downtrend here. What am I looking for? I'm looking for a bounce and then a rollover, looking for a sell signal. Well, what do we get here? We got ourselves a doji. And in fact, we got a 3-candle pattern where at a move up. I would have loved to see a couple more candles up and then down. It would have given us a better opportunity to go short. But then once it broke through this level right in here, it was another opportunity to go short. Then it bounced. Then it went down, and then it bounced. What are we looking for? For shorts, you're looking at lower highs and lower lows. That's the definition of a downtrend. What do we call an uptrend? We're looking at higher highs and higher lows. Did this establish any of those for us? No. We haven't even made a double bottom here, and now we're in October now. Okay, right in here is our first opportunity of seeing anything that looks like a bottoming action. Now it's only small numbers there, so what I like to do, let's see where, okay, I want to make sure that my spread's good. I'll go to a 3-day chart. I went, okay, now I can see the downtrend is well established, and now it's starting to bounce. Where do I expect it to possibly go? Around 35? Maybe a little higher? Oh, is there 35? Do I hear 35? Do I hear 36? Okay, and that's kind of where we're at. Let's go back to it 1 day. And we had a rally. We now converted ourselves into a rounded bottom breakout, which is how I saw this. Did we make higher highs and higher lows? A little bit. Let's mark them up. Oh, let's do this. There's a higher high, and that right there is a higher low than the prior lows that we made over here. With this being a swing, there was the highs, then we pulled back, we held, moved to a higher high, equal low, okay, there's a buy signal on top of that, and rounded bottom breakouts. I used to not do very well until someone told me, and it may have been Rick, said, why are you buying the first move on this rounded bottom breakout? You do realize that they're probably going to pull back, right? Well, it pulled back. Looks like kind of a double bottoming action here around 32.50 or so. Now I'll move back. I'm looking for the curl back up. Some people can wait for it to break 35. Some people could be ultra aggressive and go long now with the short, probably under Friday's low, and then see what it does when it gets back up to 35. Now, here's the rub. Reports on 11/7, and I believe it reports after the bell on the 7th. Let's see. Yeah, aftermarket on the 7th. Monday's the 4th. Tuesday, Wednesday. It's Thursday after the bell. Could we be getting a run into earnings here? And Zillow, I can tell you, is going to be high short interest. 24%. It might be worth a shot to do pre-earnings and get out before earnings. It may not be. It may not be your cup of tea. It may not have long enough to run. Balance of power has changed. Stochastics pulled back up. Balance of power is at least slightly positive here rather than negative. I think people are basically saying, you know what? The risk to the upside is probably exceeding the risk to the downside. They're probably covering a little bit of their shortness. May want to decide which one of these you like. Maybe you don't like any of them. All right, let's go on over to our shorts. CB did a sharply move down, followed by a bounce back up. There's the move lower, and that's basically a flag. I don't draw it very well. And I'm looking for a retest of at least this 146 area. It's so close to the 200, it will probably continue to drop to there. Let's look at CME, see if it was on the list. CME, I had as a short at 203.50. It's already blown at $2 below that. It's probably not a good one. Kimberly Clark, I think a drop down to 128.50 is possibly in the cards. LABD will not have earnings, but biotechs are positive. This could be playing the An opposite way to play LABU, you could potentially just go over to LABU instead of LABD. But this one's about 19 bucks. Oops. This is 40 bucks. Is it any real difference? 4140 is a resistance level, and maybe we've got some support levels around 1830. I would probably play LABU rather than LABD, the downside even. I didn't see it on the upside, but I could play it there. LHX, the combo of L3 and Harris Corp, it basically was on my list from Friday. It's probably, unless we get a bounce back here, it'll stay on my list just like the CME group. I'd love for them to get a bounce, maybe back up to this 203.50 and roll, or LHX, same thing. Maybe a bounce up to this area around 205 and then roll over. Mickey D's in the news. The chart shows that it wants to continue lower. That we had, and I know you guys are going to say there was news. Down, bear flag, move lower. I think they fired their CEO this weekend. Notice this. Let's go here. Notice that balance of power there. And notice what we did price-wise with that balance of power. We didn't go to straight line lower, but we ended up going lower. It took a while, but it happened. I want to also point out one other thing. This dashed blue line here is the 100 simple moving average. Once we lost the 50, where do we move to? We moved down to the 100, and it's kind of acted as temporary support. Then we broke through it and rallied up to above the 100 but below the 50. And then we fell through. The 100 is used by a number of hedge funds that are out there. They like it. I think it's because it's somewhere between the 100 and the 50. I don't know. I don't really care. I didn't put much credence into it until I started plotting it, seeing how many times the stock might drop to the 100. Well, in fact, is it dropping to the 100, or is there something further to the left? Well, let's see. If this was the 100 that I was looking at, was there something over here that was acting as potential support? Maybe this area right in here, it was the top of that level, and people are saying, ooh, 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 it's gotten cheap enough, I'm going to buy it. We don't want to get sucked into that. And what we've done is we know from looking at this chart that it was in a good up move until right in here. And that was probably the last time they reported earnings. September was a 9, 10, 11, 12, 1. That's 3 to 4 months. So maybe it was right in here a little later, maybe October. Maybe it's right in here in October. I don't know. Don't care. We lost the uptrend. Now what I'm going to do is I'm going to show you using the EMA only. Can you tell me where the mood changed in McDonald's? It's jumping off the chart at us. Yeah, you guys are right. Right in here. Early to mid-September. Let's go back over to the daily. Early to mid-September. That's when it changed. And this, if you were ever in a position trade in McDonald's, and I think members of the Right Way Options were for quite a while, Doug said, take your profits and run. And they took the money as it collapsed here. They lost some of their profits, but they still had profits because they'd taken some along the way. And they didn't get hit hard by this downtrend back here down to 190. It's all in the charts. Some people that are in here and then suddenly they see it rally to the 50 and they go, oh, I'm going to get bailed out. I'm going to get bailed out. I'll just hang on because I want it to get back up here or get all the way back up here and get my money back. Not saying you went long there, but get some of the profit that you used to have that was on paper. Well, don't get greedy. Take it now. Get out. Take a $100 loss if you have to today, because if you stick around too long, it's going to be a $500 loss. Rick is fond of saying that. And he's right. Starbucks. Where did it change character? Well, right in here, moved down. It paused at this 89 and a quarter. 89 and a quarter was somewhere around where the bottom of this congestion area is over here. And then once it lost 89 and a quarter, there was not a lot to stop it before almost $6 lower when it got to the next level. I see it going to the next level lower. There is a distinct opportunity. When we got up and gapped up on Thursday, did anybody short that one up there? Or did anybody short it on Friday before it rolled over? I didn't put on any new trade, but I was itching, trigger fingered to get there and go short that puppy. But I didn't because I'm following my rules. Yeah, I mean, I like their coffee, but I don't need to pay $5 or $6 for a cup of coffee. I'm not that. Heck, I buy coffee grounds and put them in those little things. I don't even buy K-cups. I buy the filters in the little K-cup that I put in it and then put raw coffee grounds in there. I think it tastes just as good or better because I can put as much coffee grounds in there as I want. Some of the coffees out there for me, I know you guys are going to say I'm weak, they're just too strong for me. All right, short crude oil. Actually, by looking at this and coming up, what is with UCO? Well, possibly go UCO instead of SCO. Either one of them looks good. One to the downside, one to the upside. Other thing is Excel. This one is still set for a move down. EMAs, it's grinding lower. I would be looking for a move to 62 or maybe down into the 61s. Let me see. Yeah. The problem I have with Excel, again, here's Excel, 100 period moving average. Pretty much a little bit above the tops of these candles over here. There may not be enough in it now that I look at it. The pattern is right, but the dollars are probably not there. All right. Anytime I see utilities or regulated utilities, there's probably, you have to be on the side of a trend. You probably got to go minimum of 3 days, probably weekly charts and trade them. They probably don't move enough. The average true range, 84 cents a day, that's good, but 1.3%, it's probably not enough. The Shorts here were probably the weakest. All right, I think I had a question in there. And who was it that was saying, is it too expensive to subscribe to shortsqueeze.com? I think the answer is yes. All right. Hey, Debo. All right. All I do is I use Short Squeeze and FinViz. All right. I have a list of earning stocks. And let me grab, after the close on Monday, there's my list right there. These are the ones that are going to show short. I'll show you how I've identified those. I'm going to copy this. I'm going to go over here to Screener, paste them in here, filter. I'm going to wait here for just a second. This is going to get a pop-up, get rid of that puppy. Then I'm going to go over here to ownership. And I'm going to do a float short, pop to the top. Every one of these stocks basically meets my criteria as short. There's 20 of them. And I think there's only about, let's see, 11-04. Oh, no, 1105. There's 75 there, and of those 75 that made the criteria, we got 20 to 22. So you've got probably around, what is that, 25% or so of the stocks that are reporting have high short interest. I use the free version. Now let's compare a stock. Let's pick up Shake Shack. Shake Shack here has 18.34% of the float short in Stock Screener, FinViz. Let's see what this says over here. This is 17%. Those are close. Okay. What's the difference in these? These are both free. They both are going to be delayed. Those numbers are not going to be as accurate as you'd get if you were a paying member. Just not going to happen. Now, both of them are going to be off anywhere between 2 and 6 weeks, depending on how close you are to the date of feed day. So, let's look at Shack. Oh, Shack. Do we think that number went down over the last 2 to 6 weeks? Stayed the same or went higher? I'm going to guess that it probably went a little higher as we continue to go down, or people covered. But it probably didn't appreciably go down. That's my guess normally, until we see a significant rally. People are not going to cover. They're going to continue to ride it. Because a lot of these institutions that have the big shorts, they're going to ride the trend. So that's how I use it. Now, I look at it, some people will look at short rallies without an earnings event. I don't. I only use it around earnings in the earnings period. What I'll do is I'll look at those, and if I see a good pop, I can do a day trade on it, or I can do a trend trade on it. What did we do recently? Oh, I'm trying to remember. File, open. Let's see what we had last week. We'll try to figure out. Hold on. I'm opening up last week's list. Come on, baby. Think harder. Think harder. Was it FireEye? FireEye reported on after the close Tuesday before the open Wednesday. It went down and it went back up. Then this has 17%. So 17% of the float is short. It had a rally. It had a rally up to where? Prior swing level. Yeah, Bob's actually negative for Shack, for FireEye, I mean. And right here. And so in Shack, it's a little bit negative. But I don't put as much credence into that as price movement. And I actually long FireEye. I took partial profits on Friday as we got. I went long on Thursday on the move up above 1560. Figured I'd get a retest of the 1620 level we did on Friday and up. Support on the 200, you could call it that. What else happened around the 200? I think it's price. I think it's a combo of TO. It's a combo of this stuff over here and the tops of these over here. That was old resistance. Old support now becomes resistance. Resistance now becomes support. And it worked. Not yet, Dolores. We're not there yet. Okay. So I almost said I'll defy anybody, but I won't. I recommend to everybody that if it comes back to a moving average, 50, 200, 100, even your 8s and 17s, look back to the left and see if there was any kind of price level to congestion there. Either a congestion or a swing level or a spike level or whatever, spike down the top of it. You'll find most of the time that's why you're going to have. Why did this one here stop at 1430? I tell you, I believe it's because that was the bottom of that move to up and down. The gap down, move up, followed by the gap move down. That's why that acted as resistance. People who went long here said, Lord, if you just get me out even, I will never do this again. I promise. All right. So let's get rid of those. Let's go back to the presentation. Let's see if we've got any more stocks on our short list. Nope. Back to the presentation. I said you've stuck around. There's a 60-day trial offer. $49. That's less than $25 a month. You can get either the Hit and Run Candlesticks room or the Right Way Options room. Try a 2-day trial offer with one. Flip over to 2-day. A 2 month for one, 2 months to the other. See how you like either one of them, and then sign up. When I first signed up, I would have jumped at anything like that. 2 months, you need more than a couple of weeks. Anybody gives you a 1 week free trial, you don't know what's going to go on in a week. That doesn't show you what they do. It shows you a glimpse of what they did that 1 week. Is that going to be representative of the entire year or multiple years? No. A month may not be enough, but I can guarantee you 2 months will show you. You get in there, you show up, you'll know what we do. And even if you only did it for the 2 months, now I'm gonna say this: if you only did 2 months, you're gonna learn so much in that period of time that if you then went out on your own, you'd probably know enough not to be dangerous. Now, I would strongly suggest that you do a whole lot better by sticking around. I defy anyone who follows the logic and right way options or hit and run candlesticks that does not make enough money to pay for the annual subscription. The annual subscription every month. That's my take on things. And I know I'm prejudiced, but give it a shot. Hey, $25. Trip to what? Chili's, Outback's, Applebee's with some drinks. Tip. You're there. All right, we're not there yet, Reggie. All right, you can follow me. There's on StockTwits. I do a lot more posting on the weekends than I do during the week. I'm just darn busy. I'm going to post up my YouTube channel. All right, and I'm going to take you out to YouTube. So I want to show you something. I promised. The whole idea is not necessarily for you to get to look at your. I want to teach you how to fish. I don't want to just help you get that one fish. I want to help you get a whole net full of fishes. And go out here and subscribe. I have a number of videos out here. We had an open house last week. Apologize. Well, thank you, sir, ma'am. Thank you. We had an open house last week. We have them maybe once a quarter. I do the look at the week aheads every Sunday. In here, you can search. Let's look at gaps. Trading gaps. There's a 1 hour and 15-minute free video on how I trade gaps. It was members e-learning back in January this year. It's the same way I've been trading gaps for 9 years. No holds barred. There's nothing held back. This was to our members where they could ask me questions and do follow-ups. Hey, Betsy, people helped us along the way. I don't remember how many people helped me along the way. And I can't give back to them. They just said, well, help the next person along the way. And that's what we do. All right? There's a presentation here with trading gaps in stochastics RSI. Let's see, earnings. Now, once a quarter, I'll have a presentation on earnings, and it's a new twist, really a rehash, a refresh of what I've been doing for years on earnings. Trading gaps primarily on earnings, but it just didn't show up. Anyway, the videos that we've got out here in my room are, I think, pretty good. Now I'm going to say one that is absolutely amazing. And that's Doug's right way options. Doug is by far the best options trader that I have run across in my 20-something years of trading. Bar none. All these people who say, oh, I make all these fancy trades and I make all this money, prove it to me. Go subscribe to Right Way Options. Every morning he puts out a free video with morning market prep. And we'll put out trade ideas. And, oh, by the way, he has free videos on how does he use volatility stops. 3/8 trap. And this is all free. Go out and use it. Now, you're better you're better if you actually are a member, because you could ask the other members or ask Dove live on charts, because some people will look at a 3A trap and say, oh, it's a 3A trap, I'm going to buy it. Well, remember, it's in context. The other is my good friend Rick Sadler. He has a lot of good information. He's been trading a lot longer than I have. And subscribe to his channel. You're going to grab information from all of us that will help you out. All right, enough of the pontification. I apologize for the hard sell, but it's not. I'm actually trying to help you. All right, I'm going to open for general questions, not stock specific. Things like we were asking before about maybe either stochastics RSI or how I use a chart. Okay, would I please show the earnings list? Is that because you want to know how to build it, or you want to know what the earnings list is? There's the earnings list. And that's last week's. This is this week's. And I pulled these up. Unfortunately, there's more errors in here now than there used to be, because I used to use Briefing.com. Briefing.com changed their format. They were more accurate about when the reports were, because I grouped them together, the close of one day and the open together. You're welcome, Robin. And I'm now using, what am I using? Seeking Alpha. And Seeking Alpha has a pretty decent, but it probably has 10% errors in it. Now, I cannot spend the amount of time that it would require to type every one in, because I have to go out, and what you're seeing here, maybe 75, would be 300 stocks. Then I filter them to find, let's just see, it's 11. There may have been 307 stocks that I filtered out for stocks that had enough volume, the right price, and had movement. That's basically tradable stocks. And I came up with 75. And then 11-06, that's 78 in here. Oh, it's over 300. All right, so enough there. Ken asks, when do you consider the market being overbought? Seems that most of your buy stocks are up at, a lot in the last month. Well, that's because they are. And when I first started trading, I was trying to use the buy low, sell higher mode. Buy as cheaply as I can. Unfortunately, most stocks are cheap for a reason. They're cheap because they're not performing. I found out a lot of times if it's buy high, sell higher, works better. Now, I will admit that the markets are extended. I don't call them overbought. I don't use the O word, because what's overbought? I'm going to go back again. These are ones that I know, because these are ones. I was in Costco for over 2.5 years on a position trade. Everyone that got in here says, Costco, 27 times earnings. It's a discount food and grocery store, yada yada store, electronics, yada. Well, was it making us money? Was it going higher, pulling back, going higher? Oh, then we got a dip, and it would go higher? What about this move right up in here? This trend? I have learned that if that trend will continue until it doesn't. And now, wait a minute, Steve, that's a stupid thing to say. Well, of course it is. But what it is, it's saying that this trend, we're going to do a pullback. I need to be looking for the pullbacks. Now, this one I wouldn't consider a pullback. Right in here, let's kill that. Delete. Repeat. I'm looking for that move up, pullback. Move up, consolidate, pullback. Now it's a deep one. In August, the markets were getting a little weak and they were getting a little concerned. Well, why don't we look at stochastics RSI to help us time it? Whoops. Stochastics RSI right here was pegged. Some people say, oh, it's overbought, it's overbought. Well, no, it's extended. Does that mean it's not going to continue to go higher? No. This is the beginning of the, quote, overbought area. And it went up to the area where it actually crossed back down. That was a couple of weeks. That was 250. That was 270. That was 20 bucks. If you had said, this is overbought, I got to sell, or don't get in, you either sold too soon or you passed up an opportunity for 20 bucks per share. What happened here? Down here at the bottom, that was a buy signal on the price, a confirmation of that signal using stochastics RSI, which I have a video of. It continued higher. It got to the high side, stayed there for a while until we actually price moved. Stochastics RSI is an oscillator that is artificially bound at 100 and supported at 0. That number, if we let it get unbounded, could be 150, could be 125, could be 175, could be minus 25, could be minus 50. I don't know. I don't really care. The strongest of the strong are going to stay up here pegged at the top for a while. They won't stay there forever. Most of the time, they're going to get up there and roll over. We'll go up there and roll over. When you see one stay up there, or you see them stay and wallow around the bottom, they're the strongest of the strong or the weakest of the weak. In an area right in here, you just avoid it. And you wait for the next movement. Oh, well, this one moved back up. It's time to buy. No. The context, remember, this is where if you stayed in the room or just attend our sessions here or go out and see our free videos, people would look at my stochastics RSI video and go, oh, there's the crossing. I should probably buy right here. No, because what's the context? We're in a grinding lower. We didn't get out into a true buy position till over here. Wait a minute. Your stochastics RSI was only at the midpoint. There's another point. Stochastics RSI at a midpoint, the strongest of the strong won't pull back any lower than the midpoint. All along in here, this was building cause for a move up. But it takes a lot of time and a lot of study to find out when that works and when it doesn't. Oh, wait a minute. I'm just noticed another one here. This one's going down. Stochastics are going down, but price actually trickled upwards. Well, what's that all about? Well, that's a divergence. It's a warning sign. This right here is saying you that momentum is waning. Be careful. Sell at the first sign of weakness. Be ready, or maybe take some profit if you got it. Definitely don't think about going long. Those are all little things. Okay, sorry about that. Do I use 2 or 5 minutes for intraday trading? Yes and no. I don't have my charts up, but what I will do is I will show you. Uh, what did we look? I didn't trade anything on Friday. I traded futures on Friday, but that was it. Maybe we had a Thursday. Let's look at earnings from last week. File, open. There it is. I knew if I closed it, I'd need it open again. Oh, I know J.P. Morgan moved. Let's see if that one works. Yeah. Okay. J.P. Morgan had a potential buy a doji like the last 2 days, Wednesday and Thursday of last week. And right in here, if it gaps up over that, we'll have a little minor kicker, which is a gap in the opposite direction of the last trend, which was down. There was a trend, and we gapped up above the high of Friday. All right, let's go to a 5-minute chart. Actually, I'm going to go to a 3-minute chart. Why 3 minutes? Could actually use a 2-minute chart or a 1-minute chart. Because then I could say I want to do 5 minutes, right? Okay, that's a 1-minute chart. 1, 2, 3, 4, 5. I want that stock to get above that level. I'm not going to go long until it gets over it. Well, I could have gotten sucked in right here. 1, 2, 3. That's a 4-minute level time. So if I used a 5-minute opening range, it may or may not have sucked me in. It didn't because it's Friday, but it wouldn't also because it went up there and pulled back. Okay. It pulled back. Where did it pull back to? As long as it stays above that level right there, I have permission to go long. These are my rules. What this really did, let's get here, color, green. I'm going to fill in that gap from Thursday. The close on Thursday, the gap up went to there. That's the candle that we formed. That was a huge move up. Would 50% of that level be okay? Let's just add that. That right there is all one candle, okay? Now let's do the quads. Actually, quads should be down to there. That only pulled back to the 25% level. That's extremely bullish. Extremely bullish. We had, like one person calls this a T-line crunch, where the 8 comes back onto the 17 and scrunches together. Some people call it a 3-8 crunch because they consolidate to one another. All I know is that it pulled back, it wouldn't go any lower. We had 3 or 4 dojis, and then it started going higher. You could go long that one. Boom. And oh, by the way, everybody knows now, this is a $126 stock. But we now, with no commissions, we could buy 50 shares or 20 shares and not have to worry about it. If you don't have enough money to put $12,000 or $25,000 on one trade. We now have the luxury, everybody, of trading the big stocks and buying 10 shares of Amazon or Apple. It's a whole new concept that I'm trying to get my head around and to necessarily teach other people. All right, what's happening here? This is a 1-minute chart, guys. We're in a trend upwards. Let's change that to a 2-minute chart and see what happens. Ah, pull back. Now you see the doji, and now you see kind of a doji-ish. So now the 2, 4, 6, 8, 10, 12, 14, 16, about 15 minutes into the market, it starts to move higher. What I normally do is only on earnings reports will I look at a 1-minute chart out of the gate, a 2-minute, 3-minute chart out of the gate. But most of the time, I want to get it over a 5-minute high before I go long. I want all the dust to settle, and for it to be proving to me that it wants to go higher on a day trade. Now, if you went long, let's see here. If you went long in here, the stop would be underneath the volatility dot, underneath these candles by a bit, maybe 15 cents or so. With your first target could be as tight as a retest of the highs. Let's say that's where you go long. Your stop is down there. That's 20 cents. It's actually 18. I'll call it 20. The retest of those highs is 50 cents. That's over 2 to 1. That risk ratio is excellent. And it got there. It had a big downturn right there just after the 10 o'clock news announcement, but then rallied. Excuse me. And you try to do these on a closing basis. And you could have read this up. Oh gosh, and that's on a 3-minute chart. If somewhere along in here in 15 minutes or 30 minutes in, I'm going to transition to a 5-minute chart. And if I've already taken profits, I may take another quarter off the table. Well, I may want to transition to I need to go back to 3 minutes on that. Because that's a 3-minute chart. There's the 5-minute chart. There's the 15-minute chart. You could have stayed long almost the entire day based on the 15-minute chart. And do you notice here though, from about 2 o'clock onwards on Friday, it really didn't go anywhere? Well, one, we'd already had to move. I've done my journaling, and I strongly suggest people journal. Find out when you trade well and when you don't. I found out that I used to do really, really well in the mornings. I do less well in the afternoons, and I would do not so great on Fridays in the morning, and I'd give it back on Friday afternoon. So what did I do? I stopped trading on Friday afternoon. I still do not trade on Friday afternoon. I go out and do somewhere else. I'm gone. On Friday mornings, yes, and that's because we get more predictable moves, Barry. And on Friday mornings, went from my worst day to my best day because I became more and more particular. I'm picky about my entries. And Doug brought that out to me. He said, hey, he saw my daily report that I was posting about how much I made and whether it was morning or afternoon. Or said Friday, I would do it daily. And he said, Friday's your best day. And I went, you're right. I hadn't noticed it, but I was focusing primarily on the week. And I said, well, I really earn my money on Friday. He said, why don't you do it the rest of the week? I went, duh, because I'm impatient. All right, CB wants to know, do I trade within the first 5 to 10 minutes of the day? Or 10 minutes a day? Yes. Okay. If we had an earnings, what do we have for earnings on Friday? Whoops, it's there. Hold on. I'm gonna pull this down because I don't remember what ones because I didn't trade them. I want to say Stratton. Okay, perfect example. That's 5 minutes on Briggs and Stratton. Let's pull it to 10 minutes and show. If you didn't trade the first 5 minutes, you didn't make any of that move. You're welcome, Tebow. Now, am I advocating everybody trade a 3-minute chart? No. You're going to have to earn the right to trade on a 3-minute chart. You could have made money on a 2 or 3-minute chart right there. But you got to know what you're doing. And what I'm saying, knowing what you're doing, is make it prove that it wants to get that first 3 minutes, get it out of the way, especially on earnings. It was a surprise. Let's look at the daily. Boom. Round and bottom breakout. Probably going pretty good. Is BGG? Yes, it has short interest. It's on that list. What is it at? Stock screener. No. Rick Sadler. That's right. Let's go here. BGG. Briggs. Whoops, not GG. 20% almost. 19.7%. Is it going to get a run? Probably. All right, and then go to a 3-minute chart. Now what you have to do is you say, I want to be long if it can hold. Well, I'm probably going to wait and make it get into that wick a little bit. And my stop, people will say, you got to have your stop down here. I say bogus. No way. Do I have to let it go from all the way up here to 780 all the way down below 750 before I have proven to it's proven to me that it's not doing what I expected? No. Now, it's going to have some volatility, so I'm probably, let's get over here. My stop is probably going to be somewhere in the midpoint of this candle. Below the candle that brought me in, but not all the way back down here because it's too far. All right, from there to there, and where's my target? And I have to figure out, well, I don't know what my target is necessarily, but I have to figure it out how much I'm going to take. I'm risking, let's say 30 cents. So I get 60 cents up on this puppy. Going to go from, let's call that 780. 60 would be 840. Aha. That's where I'm taking my first profit. Where would it have to get to if I took that profit right there of 60 cents? Where would it have to get to? I'd had to allow it to get to before I became a loser. I'd have to do 60 cents below this. I'd have to get almost below 7. Nobody's going to do that. We're going to probably play the ATR dots, and we're probably going to get out somewhere around here, around that $8.25 again. 840 to 820. Okay. Not bad. You got 2 and 2, so you got basically 2 times the risk, 2 times the risk. I'll take that all week, every trade. You can do that at 200, 400 shares. Okay, because of the fact that you're only risking, I said 30 cents. If I'm risking 30 cents per trade, and I wanted to risk no more than $100, basically I can buy 333 shares. Actually, Dolores, I will show you what I do. Let me bring it up. We're probably not going to have time for your individual stocks because we're already at 9:30. But I think this is more important. So I apologize to those who came in, figured I was going to get to look at your stocks, but I'm trying to do for the greater good here. I'm bringing up my trading platform. have an account with, I have accounts with, plural, Thinkorswim and Ninja Broker. I use Ninja Charts as my Ninja Trader Charts as my primary chart. What were we here? Let's say BGG. All right. That's a 15-minute chart. Let's scrunch this together. And this right in here told me pre-market was trading down over here, and then suddenly, that's the first 3 minutes. It was really, it gapped up and pulled down. Then it moved away. This right in here, the blue lines, that's the 5-minute opening range. It's already plotted for me. I don't have to calculate it. So I'm on a 3-minute chart. I could even be on a 2-minute chart, possibly. And watch it on a 2-minute chart. I don't normally, especially with Briggs and Stratton being, it's a little on the thin side as far as the trading goes. But what I was just trying to do is grab one that gapped up that had high short interest. But I'll plot a 3-minute chart and trade on it. However, now these are the futures on a 3-minute chart. I will actually, 3 minutes, you notice that we moved up sharply right out of the box and did not move again. Oh, sorry, that's 8:30 after the employment report. We didn't move again until the open, and we went flat. There's the 5-minute opening range. And then we kind of decided whether we were going to go higher or not, then moved up. Thanks, Barry. And then didn't go very much higher. Now, that's not what I use to trade the futures. I use Unirenco. And I'll use, depending upon where we are and how fast we're trading, all right, 3.7. There's the 4.8. There's the 8:30 move and the 9. And if you go out there and look in my YouTube channel, sorry, I was having a senior moment there for a second, on my YouTube channel, and you find out my favorite chart patterns. I think you may find them out there. And you'll find things like, I'm looking for continuation patterns. And it happens in the futures a lot. Wrong color. Let's do this. See that 3-candle pattern here? Up, down, up. Go long above that. With a stop below that, or the dots. You usually get a winner. There's another one right there, but it's a little extended, and it would have got a minor winner. Yes, I'm showing the Ninja Trader chart with my configuration, my setup. So it's very configurable. And oh, by the way, Stan, it's free. Now, if you want futures, you have to pay for the data. If you want stocks, you just connect your platform into Thinkorswim. You have to tell them, I think, that you want your data feed, and right now, they will connect it, and um, all of your stocks and ETFs that you want to plot are the data feed is off of Thinkorswim. I'm trying to what's IGG? Trying to find something that moved on Friday. That didn't do anything. Ironwood moved a little bit. That was a $10 stock. Booz Allen and Hamilton moved. There's the beginning, the open. So it's totally configurable. Did a car move? Yeah, car moved fairly well. 20 some odd dollar stock. Oh, both. the studies here there are thousands of them. Now, can I scan on NinjaTrader? There is a crude way of doing it. I've only tried it a little bit and I gave up because I use the LTA scanner, and then I'll use earnings. That's what I love, earnings season. Now, Rick and Doug say they hate earnings, but I love it because it tells me which stocks to be looking at. I have a universe of earnings stocks that are out there, and I watch pre-market which ones are moving. Then I narrow it down to about the 10 best, and I put that on a list, and then I'm off and running. I only have to pick out the best. Now, it's a little bit more difficult, easier said than done, when you're talking about individual stocks. Let's do this, do restore, take this down. Off, in queue. All right. Now, I'm more than willing to work with people on futures and stuff. We had a futures room here at one point, but you can see right in here, this is the NASDAQ on Friday. Well, we didn't start off very well at 9:30. Somewhere right in here when we broke above, I think, the 5-minute opening range, 9:50, just before 10 o'clock, we got the idea. Well, you know which ones I like, Barry? I like the ones that reported the night before, because then I can do all of my analysis the night before. But I won't trade them until they open the following day. But I have a lot more time. Do I trade stocks directly with NinjaTrader? No. I trade with... yes, I believe so, Don. Let me look it for you. Do you trade stocks directly with NinjaTrader? No. I trade futures with them, and they're really good. And I trade Thinkorswim, and it immediately... let's just say that I was in QQQ. Take NinjaTrader because I didn't have that. Let's just have a 3-minute chart. Okay. All right. Here's a 3-minute chart of the Qs. I can trade directly off this chart in my Thinkorswim account. It's totally linked. I get the data from it, and I can trade directly on this chart, and I can use all of my setups Uh, and it just, to me, it's fantastic. But I'm prejudiced. I'm not trying to sell anything. Ninja's free. Um, what's the other thing? Don wanted to know, and I apologize and bounce it around here a little bit. And we're going to have to quit here in just a second because I'm getting hungry. Um, Video and training earnings. Let's find out. Videos. Now, I'm looking under gaps. Almost everything, are all the studies free on Ninja? No. There are a lot of them that are free, and I can show you where to get them. But there are some that are paid for, and I've got a few on that are paid for. If you join the room, even as a trial member, I'll help you. I can't give it away to everybody. I just don't have enough time. All right, so anywhere there's trading gaps under my MQ, search for gaps. Anything in here can be used for trading. Mostly they're earnings gaps. So trading earnings, Don, go there. That'll tell you most of what you need to know. Again, I will reemphasize, you are not going to get everything you need to know from just that. Is trading off the Thinkorswim chart doable? Yes. The one problem with Thinkorswim charts is that they aggregate their trades. Not as much of a problem under stocks as it is under futures, but there is a delay, a lag. I have compared when I had Interactive Brokers data and I had Thinkorswim stocks. Sometimes the data, especially when it's really fast moving market or either an individual stock or the markets, it would lag. So you could trade it. You're probably not going to be the exact, but it's pretty darn close. Now, I use TC2000 for charts, and you think Thinkorswim lags. Actually, all right. TC2000. The way I'm like a carpenter, and this is going to be the last thing I cover tonight. I just got to go. A carpenter has a lot of tools, and he's got saws, he's got hammers, he's got chisels, he's got everything. Planer. Well, if you only had one tool to use to trade, what kind of carpenter do you think you're going to be? What kind of trader do you think you're going to be? Well, I got TC2000. What do I use it for primarily? Overnight scans. Try to find the daily picture and figure out what's going on. I look for my J hooks. I look for the rounded bottom breakouts. Okay, now I'm on earnings, but let's say, now you can do the same thing in TOS, but the problem is the scans are a lot slower. When you use, I combine my watch list, and your watch list management just terrible in Thinkorswim. It's great for watch list management in TC2000, and for real time scans, I use the LTA scanner, and it pops out and tells me which ones are running, and then it'll say, "Ooh, you need to be going to look at JP Morgan." Okay, now most of the time, if you're not looking at the right stock in the first 5 to 10 minutes, you probably missed the run. Most of it. You missed the good entry. You may have to wait, and you may or may not get it. All right. But if you're a swing trader, not a day trader, TC2000. And oh, by the way, I use Gold. I don't even pay them the $15 a month to get real time quotes. I don't care. First 15 minutes of the day, I'm busy doing some other stuff anyway. In fact, during the first half of the day, I'm not scanning for new entries. If I haven't already found it, or it's not showing up on LTA scanner, I'm not going to find it. I'm probably not going to be able to trade it. So I'm using my earnings list. So on Tuesday, so on Monday, those are the only ones I'm looking at. Now, you guys say, oh, I'd steer away from UAA. It may not work, but there's SYY. It started to run ahead of earnings. UAA, if it breaks above the 2165 area, or if it looks like in pre-market, it's going to gap up to 2450, then I'm going to watch it. And I covered that in that trading gaps, and I'm not going to go over it again. But I love for them to gap to a prior swing level. Let's say it goes to 24 bucks. I'd love for it to gap to $24 tomorrow and open at that. Then I use the first 2, 3, 5 minutes to see if it's going to continue to go higher and trade it long. I already have that identified as on my watch list because it's on earnings. And I go to the earnings list here, and this is Thinkorswim. This is not going to be right because we're after the hours. But I basically sort on the last trade mark, not last, but the actual, and start looking at those and figure out the ones that percentage movers up, percentage movers down, and that's what I'm looking at. I normally only trade the long side because I'm trading in my retirement account. Most of my money's there. All right. I want to thank everybody for showing up today. Think about giving us a shot on the 2-month trial. I'm sorry I didn't be able to get to your stocks, individual stocks tonight, but I hope you got something out of it. This has been recorded. In about 45 minutes to an hour, it will be posted up to the YouTube channel. Sign up for those YouTube channels, especially Doug's Morning Report. All right, you have a great day, and we'll see you around the flagpole. Ta-ta.